Yo, what's going on? Welcome to this video. In this video, it's gonna be a raw, unedited video where I show off my 3 types of models. We are first going over my reversal model, then we are going over my continuation model, and last but not least, the retracement model. And when do I look for a reversal model? When do I look for a continuation model? And when do I look for a retracement model? Alright, so let's just go quickly over how these models look. Alright, so a reversal model is it's kind of in the name, you know. We want to catch the top move and then the down move, you know. If we are in an uptrend, for example, right here, we kind of want to find our trade within this area right here. Yeah. Alright, now a continuation model. This is just a where you kind of play the trend, you know. The trend is your friend. Here we probably want to find our trade within here or something like that. And last but not least, the retracement model. Okay, whoops. Alright, so in this case, we want to find our trade like within here and our target somewhere down here. Let's see the targets for a reversal move. My reversal model focuses on liquidity, fair value gaps, and equilibrium most of all. Here we want to see some kind of liquidity being swept and have a strong indication that we are going down. For example, we have a strong drawn liquidity. So that's the reversal model and what I focus on there. Now the continuation model is if we get like if our order flow in the New York opening is extremely, let's say my bias is bullish, and we just get I typically look for a reversal model every time I get into the market. So I typically want to see, if my bias was bullish, I typically want to see us displace lower. Why? Because I told you that my reversal model is based off liquidity. So I always come into the market and want a displacement lower or higher depending on my bias. But let's say we don't get a displacement lower in this case because we are bullish and we just shit upwards, you know, we just pump, then I'll be looking for a retracement. And where do I want my retracement? Well, I will want my retracement down into a fair value gap and equilibrium of the range. Alright, now the retracement model. Let's say that we made some equal lows or something down here, because that's a very strong drawn liquidity, or just a fair value gap or a unstabilized EQ or something. I would look and wait for a sweep, maybe wait for a higher time frame fair value gap, and I'll look for my trade in here, and here I'll only be targeting like a fair value gap or EQ of the range. Here we typically want to target a bigger move, and also in this, if our drawn liquidity is higher, we want to target that. Okay, so now let's go into some visual examples. Alright, so let's start with the reversal model. What do we want to see here, or what do we mainly focus on here? Focus first of all liquidity. Why? Because the market likes to hunt liquidity and use liquidity as its fuel. What do we focus on as well? Fair value gaps. Why? Because it's the best PD array in the world. And next, equilibrium. because the market likes to tap into fair value gaps and into equilibrium before delivering. So market opens right here at 9:30. What do you see happen? Well, first of all, we get a quick move up. We sweep out these highs right here, some over here, and we go down. And you can see all this engineered liquidity build up right here. Some people probably got a short from down here, but that's not what I was looking for this day. And why, you might ask? Well, that's where draw on liquidity and bias comes in play. Because what do we see here? We see that we are in a very decent downtrend right here. But this right here is a London low, and this right here is an Asia low. As you can see, they are they are so close to each other that you could call them relatively equal highs. Now, why do you not want to short on a day like this? Well, because I know that these points are going to get hit because it's such a strong draw on liquidity. Also, just if you look at all this engineered liquidity right here, the market obviously wants to take out all this liquidity right here. Why does the market want to do that, you might ask? Well, because people place their stop losses on these highs right here. That's why they are so significant. And what do you reckon? Look at the market. Sweeps out all these stop losses. And let's go on the bit higher time frame right here. Let me remove this. Where are we delivering out from? We are delivering out of this fair value gap right here perfectly. I mean, and let's drop down to the lower time frame again. Here we are. Wait a second, let's go into higher again. Yeah, here we go. And we tapped equilibrium of this range. Perfectly fine as well. But the most important part here is the draw on liquidity when looking for reversal models. We need to have a clear draw on liquidity. It can either be session highs, it can be previous day high, it can be London high. I always said that it can be low resistance liquidity, it can be everything. Alright, but now I forgot to tell you my entry, my model. So now that we swept out all this, delivering from a higher time frame for value gap, and tapped the EQ of the range, what do I want to see now? Well, I want to see a newly formed fair value gap like this get disrespected. That's what we call an inverse fair value gap. And in this case, I'm pretty sure there was a 30-second down here or something. But then I want to take my entry right here and just target these highs. Yeah. I'm pretty sure there was a better entry for this one, if I remember correctly. Because that's actually a pretty shitty entry. Yeah, it was a 30-second down here somewhere, I'm pretty sure. But anyways, that's the main thing about my reversal models. Okay. Now let's go to the continuation models. Alright, this was actually yesterday. Wait, snooze break. I was bullish coming into the market because we are just disrespecting every single fair value gap on the way up, and wanted to see us take out this high right here. If I can, yeah, this high right here. But we never did. We used this high right here as a rejection block. And when market opened, my bias was pretty mixed, I was bullish until proven wrong. And as you can see, there isn't really a setup for a bullish long. No, I'm sorry, long. And what happened? We just shit the bed. Now, when do I flip my bias from being bullish to being bearish? The fair value gaps. When I see fair value gaps to get disrespected. Look at this. Yesterday. Yeah. We had this fair value gaps where I initially wanted longs from, but as you can see, we disrespected it and we closed under it. And that's where I flipped my bias from being bullish to being bearish. Okay. So now that I am bearish and we got this displacement lower, I want to see continuation models, not reversals, because I am bearish now. So what did I say we focus on in this model right here? Focus on fair value gaps and EQ. That's it pretty much. I want to see either a 5 or 15 minutes. 5 or 15-minute fair value gap form. So let's see if there was any 15-minute fair value gaps. Nope. As you can see, we closed every single one that we created. How about a 5-minute? Oh, what's this? We have this fair value gap right here. Alright. We have this fair value gap and we tapped into it. Now we need to find the EQ of the range. Now a lot of you guys want to draw EQ of the range from the top here and all the way down to like here. But I don't do that. I draw EQ from, in this case, this range right here down to this low right here. And I don't care about this EQ anymore. Why? Because we already tapped into it, as you can see, and this plays lower from it. Now we focus on the next leg, and the next leg is this leg right here. And we draw it from this to this. And as you can see, we tapped EQ, got into the 5-minute gap. Now I want to go down to the lower time frame. Yeah, it was the 2-minute. Yes. Alright. Now I want to see if a value gap form on the way up, as we did right here. And I want to see a close below it. And this candle did it with good displacement, so that tells me a lot. And after the close, I just enter the trade. And I target a swing high or whatever. This was low of day, I targeted. Nice. So that's the continuation model, and let's just move on to the retracement model now. Alright, so what I focus on when I trade the retracement model, I just focus on liquidity and fair value gaps as well. That's the main thing I focus on when trading this model. I want to see us, and let me just break down what the retracement model is and what I aim for. When I play the retracement models, I usually target unfilled fair value gaps, as you can see right here. This fair value gap hasn't been touched yet. I do this on the 5 and 15-minute time frame, I look for value gaps that hasn't been filled. So you can see we got the 15-minute and we also got the 5-minute. Now, why do I like to use fair value gaps as my take profit? Well, because we know that the market seeks fair value gaps. Okay. So let's go on the higher time frame and see if we can find a fair value gap that we are displacing out of. We do have one right here. That's also unfilled, and funny enough, we come down and bounce off it. As I said, the market likes to fill fair value gaps. Alright, so we have a fair value gap, check. Now we need to see a liquidity sweep of some sort. We got our buy side liquidity sweep right here. Here we go. And this low right here, we made an SMT with it. And yeah, SMT, if you don't know what that is, it's just when NQ takes the low or doesn't take the low right here, but ES does. So that's an SMT. So in this case, ES took this low right here and NQ failed to do it. So now, when I have my drawn liquidity, which is these unfilled fair value gaps right here, drop down to the lower time frame to see the highest time frame fair value gap. And in this case, we got a 5-minute fair value gap right here that I want to see inverse. Okay, and as you can see, we inverse this in this leg right here, pretty high up. So in this case, I would look for I would wait for it to inverse this and drop down to a lower time frame and see if I could get a better entry. In this case, it's a little bit better entry right here. If we, how is it? Nah, it's not. This is just more conviction. So if we make a 1-minute fair value gap, you could place your stop loss like under this low right here instead of all the way down here. It's just like an extra confirmation. So we inverse this, check, made a fair value gap, check, tapped into the fair value gap again, check, have our drawn liquidity, yes. In this case, I would target this 15-minute fair value gap right here, and this 5-minute fair value gap right here. And that gives us a solid risk to reward at a 1.92. Now, why don't I just go for this high right here? You might ask. Well, because this is the retracement model and we are in a clear downtrend as of now, because we are delivering from this fair value gap up here, and we're just constantly breaking fair value gaps all the way. So we are in a downtrend. I'm just looking for a piece of the pie, the retracement up to the fair value gap, and it also aligns perfectly with EQ of the range as well. If you wanted to just target a 1-to-1, you could just target the EQ of the range. Okay. So yeah, that's pretty much my models. And remember, there are more to it than just this. This is just like, I mean, you need market experience as well. You can't just go blind into the market using these models, but you can backtest them if you want to. I would do that if I were you, and just learn the concepts and figure it out. You can join my Discord community. It's not very active at the moment. I'm just trying to grow it right now. I'm not here to sell you anything. I'm just here to teach you. Okay. So I think I'll wrap it up here. I think I got the most important stuff right now. And yes, that'll be it. Bye bye.